Hello forex traders, you're welcome back. This is Carrie's Trading Institute and this is the weekend commentary for the dollar and the foreign currency. So today we're going to be analyzing the dollar index as usual. The first thing we're going to be doing is we would like to know what's going to unfold on the economic calendar. Alright, so we are paying attention to high and medium impact news events that are going to unfold during the new week. So we will likely see price forms the high or low of the week around the times that the high and the medium impact news it's going to unfold in the marketplace. All right, so you can see that this week is the first week of the month of October, and yes, of course, I'd like to say happy new month to all of you watching my reviews, all of you who have been consistent watching and learning from this YouTube channel. Happy new month, and I wish you a blessed month of October. All right, so this month we can see that this week Monday comes with a lot of low volatility because we have very little high impact or medium impact news, except for the 3 o'clock high impact news coming up on the dollar. At the same time, we still see a medium impact still unfolding on the dollar. And by 4 p.m. we're still going to get Fed Chair Powell speaks. All right, so we're going to get FOMC medium impact news by 4 p.m. Tomorrow, Monday. All right, second of October. All right, so on Tuesday you can see there is high impact news event on Tuesday. So go through all of the economic calendar and identify the high and the medium impact news events unfolding. And of course on Friday is NFP, non-farm payroll, and usually we do not want to be in the marketplace after the Wednesday New York session. We do not want to be in the marketplace because we do not trade the NFP. Not that we cannot trade NFP, but because it's not worth your time and attention, is not what your emotional you putting yourself under emotional duress. All right, so when you can catch a trade every other day, there is no point trying to put yourself under so much emotional stress just because you want to trade the news, the market. So we would prefer to stay on the sidelines after the Wednesday New York session, all right, on the week of NFP. So once you do that, you quickly go to the dollar index, and on the dollar index we are interested in identifying institutional order flow. All right, institutional order flow of the higher time frames, especially the monthly, the weekly, and the daily time frame, because that's where the institutions are usually looking to trade into, because that's where the dollar liquidity is going to be residing, above or below the marketplace. All right, so when we are in a bullish week like we see on the dollar index, the institutional order flow on the monthly time frame is currently bullish. Right, this is the current trading range that we are trading from, the low to the high. Price has traded below 50% of that range and has traded into a buy side imbalance, sell side inefficiency. Price has formed some level of accumulation of contracts here, right, on the monthly time frame. Then we see that sharp movement to clear sell side liquidity pool, at the same time trading and closing the buy side imbalance, sell side inefficiency here. All right, so this is accumulation manipulation. Then we see price piercing through the highs of the previous monthly candles. That tells us that we are in a bullish order flow on the dollar. Okay, this also looks like a bullish flag on the monthly time frame. You can see that expansion and that retracement that goes sideways, that's a bullish flag. Okay, and then we have outlined the dollar liquidity on the monthly time frame. Currently price might trade as high as taking out the previous old high here and trading into the relative equal highs right there. All right, however, we would like to see what price is going to do in confluence with the seasonal tendency around the levels that we have outlined here: the sell side imbalance, buy side inefficiency, the volume imbalance, the bearish order block. You can see these are a lot of confluences, and 50% of this entire gap from the low to the high of the fair value gap right here. That is called consequent encroachment. All right, so you can see that price is heading for it. Price has traded above the relative equal highs that we outlined here, and we identified them as low resistance liquidity run. Okay, currently what we have is that price has created a new bullish breaker on the monthly time frame, all right, of the dollar. You can see that accumulation that formed lower low, then we have a shift of structure to the upside right here. The body of the candle closing above that, that's a breaker block. We would like to see the new month candle open and retrace into that bullish breaker of the monthly time frame before price continues to trade into the levels that we have outlined above here, the drawn liquidity, the PD arrays that we have here. All right, when you measure from the high to the low of this current trading range, price is currently trading above 50% of that range, and that also is a premium level that we might want to start looking for sells around that level. Okay guys, so that's my anticipation for the dollar on the monthly time frame, and I'm anticipating that the new month is going to open, trade low into that bullish breaker, then trade back up into the bearish or the block or the consequent encroachment, and gives us a lower time frame confirmatory signature to continue to short the dollar while we are going long on foreign currencies. However, the dollar also might decide to just trade into that level, ignoring all of this. Okay, but we would like to see what happens. So on the weekly time frame also, let's refine to see what that looks like. You can see where that bullish breaker is. Price formed lower low, shift of structure, that's a bullish breaker. When we see a fair value gap around that level, it's very powerful. You can see that there's a fair value gap right there around that level. That's a fair value gap. We'd like to see this guy trade back into this level, all right, on the weekly time frame before it trades up into the weekly sell side imbalance, buy side inefficiency that we have outlined here. Then on the daily time frame, we are paying attention to market structure. We like to see price forms higher highs, lower lows in a bullish order flow, and when we are bearish, we like to see price start to form lower lows and lower highs. Okay, so this is the daily time frame. Price has formed a swing high right now, 3 candle price action, where the middle candle has the highest high with a lower high or higher high, or with a lower high, I mean to say, by the left and right of the candle. You see 1, 2, 3. The middle candle has the highest high. The candle on the left is lower than the middle candle. The high of the candle of the right is also lower than the high of the middle candle. Okay, so we would like to see the dollar open up, and this also is a bearish order block. Okay, I'm also aware that price has currently traded into a fair value gap right here. Not that I'm not aware, guys. Okay, not that I'm not aware, price has traded into a fair value here. However, this has also created a bearish order block right here. Okay, so let's refine to the 4 or 1 hour time frame to see what that looks like. Okay guys, this is literally how I do my top-down analysis. As you can see, last week during the live commentary, I showed you what happened after price traded into the drawn liquidity that we outlined here. You can see that we had a shift of market structure after price had formed a failure swing right here. Price gave us a shift of structure, creating an institutional order flow entry drill on the dollar. Fair value gap by the right, fair value gap by the left. Alright, price traded into that level. Remember, price is not random, price is algorithmic. Then price traded below this sell side liquidity pool residing below the relative equal low here. Price traded below that level, and right now price is still repricing. Okay, so where am I looking at? I'm looking at this bearish order block. Okay, I'm looking at this bearish order block on the 1 hour time frame. I would like to see this guy opens up and trades into this level to possibly form the high of the week on the dollar. Okay, what might likely happen is that price will open and trade into this fair value gap of the 1 hour time frame. Okay, this is my anticipation that we're going to see something like this. Then price will do something like this and then give us more confirmations to sell into the levels that we have outlined on the weekly and the daily time frame. All right, guys, so this is my expectation on the dollar index, and we'll just like to do the opposite on the pound dollar. So you can see that this is the pound dollar. This is the weekly time frame. Price has traded into that weekly buy side imbalances and inefficiency right here, and also institutional order flow entry drain, the fair value gap right here with an old week in between. Look at this, the old week in between that fair value gap right here, the high here to the low, that's the fair value. All right, price has traded into that institutional order flow entry drill. Can you see the reaction we're getting around that level? Price is showing willingness to go back up into the bearish breaker. This is the bearish breaker on the weekly. Price has formed higher high before the shift of structure right here. Okay, this was the last place the institutions accumulated their longs. All right, after that sell, they accumulated longs, so they sold to buy. Would like to see price mitigate all of these sells around that level. Okay, so institutions will undo their short positions. They will undo their long positions here with shorts. They will trade up here to that level and pair up shorts with longs, or pair up longs with shorts. That's what I meant to say. Okay, the last long positions here, they are going to pair up long positions with new short positions around that level. And as you can see, that also is confluencing with an institutional order flow entry deal, fair value gap, old week in between. Fair value gap, old week in between. I really hope that these lessons are very interesting to you. I hope that you're really getting to learn some of the things that we are teaching here, because what we are teaching are truly premium content that you hardly get on some of these YouTube handles. And even if you do, I don't think they are as well explained as we do here. So don't forget to subscribe to this channel if you like what you're watching, and if you like the lessons, you can share the links to the video to as many traders who like to learn from us. And also don't forget to join my free Telegram community and follow me on Instagram. The links are on the description of this video. My Instagram and Telegram links are in the description of the video. All right, so let's take a look at the daily time frame. On the daily time frame, we're interested in studying market structure on the daily. You can see that price traded down into, did you see that bullish order block with a fair value gap? That weekly IOFED is confluencing with a bullish order block. The last sell candle here that was traded through by 3 consecutive buy candles, that is also a bullish order block. Okay, with a fair value gap. And remember, the most valid order block is the one that has a fair value gap attached to it. Okay, the one that has a fair value gap attached to it, that's the most valid order block. Then you can see price traded into that level. And then what do we have right there? Look at what we have. Price has currently formed a swing low. Did you see that? On the daily time frame, 3 candle price action. The middle candle has formed the lowest low. Okay, that's a swing low that created another IWFED, fair value gap by the right, fair value gap by the left right here. Did you see that? Fair value gap here and fair value gap here. So that is IWFED. I'm looking to see price open. All right, 2 things. Price could trade into the bullish order block right here before we see this guy trade up into the levels that we have outlined here, or to cover up the inefficiencies here. So on the 1 hour, it's going to give us more clarity on what price is likely going to do Okay, so we might see the new week. Look, this is what happened. Shift of market structure here. Did you see that on the 1 hour? So price might open and trade up into the sell side imbalance, the buy side inefficiency. Okay, something like this. Then trade down here to form the low of the week around the 1 hour. You can see the bullish order block with a tiny fair value gap on the 1 hour time frame. That's bullish order block that has a tiny fair value gap attached to it. That's a bullish order block here. Okay, at the same time, you'd see that there is an old wick in between this fair value, or we can also just outline this. Alright, so we are looking to see price trade into this level to possibly form the low of the week on the GBPUSD if we are going to continue bullish. Alright, just for price to reprice into the drawn liquidities that you have here. This is the first one, this is the second here. You can see all of those levels, here. All of these are draw on liquidity. Okay guys, this is simply my anticipation for the dollar and the GBPUSD. Alright guys, so if you like what you are watching, don't forget to like the video, comment in the comment section, let me know how you feel about these videos, and then don't forget to share the link to the description of the video. You can join my Telegram community for free trade updates, and you can follow me on Instagram using the link in the description of the video. You are looking to get funded with a proprietary firm as well, check the description of the video. You are going to see my recommended proprietary firm. When you use the coupon in the description of the video, you are going to get 20% discounts. Alright guys, until next time, I wish you good luck with trading. Make sure you stay safe. Cheers.